Hello and welcome to episode 21 of the Alex Nunemaker Mortgage Podcast for the week of October 31st, 2022. In the market news, market's been fairly flat from an interest rate perspective, at least from what we've been used to. There's definitely still a lot of fluctuations, but from what we have seen recently, it's fairly flat. But the big event for this week is the Federal Reserve meeting. They'll have a press conference today at 2:30 on Wednesday, and here's what we know, or at least what the market is expecting. We know that a 75 basis point hike is coming today. For November, and the expectation is that the Federal Reserve will start to slow their pace of hikes to 50 basis points in December. Again, just as a reminder, the 75 basis point hike, this is something that's expected. It's already baked into the market. This is not going to impact mortgage rates, but what will impact it is the press conference afterwards. So if we look at other central banks around the world, there's been some concern that rate hikes have happened too quickly. So central bank rate hikes aren't like a light switch. It might take many months for us to even get a sense for what effect that they've had on the economy. So the market's going to be looking towards the comments at this press conference on what the Federal Reserve sees moving forward. Do they see anything on the horizon showing inflation easing? And like most Federal Reserve announcements, I expect a lot of overreacting today. It could be bad, could be good. So if we see a rally in the market today, and if you look back at Federal Reserve announcements, the market sobers up the next day and digests the news, and it tends to move the opposite direction the next day, and vice versa. So don't get too wrapped up in what happens today. But if we're going to make a move out of these higher rates, we are coming up on the important date. Mark your calendars for November 10th. That's the date of the next CPI report on inflation. In mortgage news, the FHA made an announcement recently that I think is pretty interesting. They approved 2 new credit scoring models. Right now, the mortgage industry, by and large, uses the classic FICO scoring model. So with the new announcement, they're paving the way towards utilizing the Vantage Score 4.0 and FICO 10T. So the main difference from what I see is that these scoring models will factor in more non-traditional credit items like rent payments, telecom, utilities. And why are they proposing these changes? The idea is that underserved demographics have items that typically don't show up on a credit report, but they do show credit worthiness. So this could be a path forward for them. So for you, the important thing to understand is this is not going to go into effect right away. Likely, it's going to take a couple of years before this even goes into practice. The other component to this is whether lenders ultimately choose to utilize these credit reports, because just because they're allowed to doesn't necessarily mean that they're going to embrace these scoring models. Time will tell, but something to keep an eye on in the future, something that we might see changing. Finally, our quote of the week: goodness is the only investment that never fails. Have a great week, and if I can help you or any of your clients with any questions or pre-approvals, let me know. They can visit me at homeloanswithalex.com. Have a great week.